Global markets experienced volatility in the weeks leading up to the US presidential election. And following Donald Trump's victory, we saw gains across many equity markets, particularly in the US. But what does the election result mean for the outlook for emerging markets? With me to discuss this today is Matthew's Chief Investment Officer, Sean Taylor. Sean, welcome. Thanks for joining us.
Thanks, Ben.
Let's begin by assessing some of the moves across the markets in the wake of the election and Trump's win. How is the election outcome currently shaping near-term investor sentiment?
The first day, or the day of the election, when Asian markets are open, they reacted probably as normal, and then when it became more apparent that Trump was going to win, there was a bit of a sell-off, but it wasn't as bad as one would have expected. For the last 3 weeks, since mid-September, we've seen emerging markets really coming off, partly of the worry of this, the dollar rising. We've had quite a big move in the 10-year. And so it wasn't a sort of unexpected event, I think, for emerging markets. But since then, we've actually had stability, and that's been very good.
So I guess some of the concerns, perhaps, or challenges looking ahead at a new Trump administration is perhaps on the macro side. If we have a stronger dollar, perhaps higher for longer interest rates, that may be difficult in the near term for emerging markets. Also is expected perhaps changes in trade policy and tariff increases, alongside increased geopolitical tensions. They're obviously affecting the investor sentiment, right?
Maybe we break it down to this framework: that why are we positive, or why have we been positive on EM since the beginning of this year? And that's been the right call. And why are we positive in the medium term? It's three things. One, it's the post-COVID pickup in growth in emerging markets. With better corporate governance that's been happening over the last few years, should lead to a higher earnings growth. And that's what drives markets. Whoever's in power, it's earnings. But obviously you have a P element of that, of what you pay for it, and that gets affected by geopolitics, etc. That story's not changed. Earnings are coming through. Emerging markets are predominantly quite domestically orientated. Yeah, if there's tariffs, etc., we can discuss that in a second, there might be some hit on those earnings. But emerging markets, you've got to remember, Ben, is predominantly domestically driven. And so it shouldn't affect as much the earnings. The second thing, and a great case for emerging markets, was weaker dollar and rates coming down. Powell's just cut another 25 basis points, but clearly the 10 years in a different direction. So that's a short-term headwind. The third was a sort of China cyclical pickup. And, I think we've probably had the best news out of China that we've had in 3 years. We're obviously awaiting more details of that. But there's no reason why that's not, going to continue to go forward. And in one way, then, a Trump administration and potential threat of tariffs, etc., might even mean there's more support. So, I'd say 2 out of the 3 things still very much, in play. The dollar and the US Treasury, I think, will take time. But I mean, at the end of the day, the path of US rates is still looking to go down. What does Trump mean for emerging markets? Well, for us, Trump, let's do the sort of 2 sides of the coin. You've got, well, one, we don't know what policies he's going to come in with. What's probably likely is that Trump is pro deregulation. So that's quite good for financial services, and that's good for growth, and that will also affect the rest of emerging markets at some stage. The second part of his is tax cuts, and obviously, that's good for global growth. It's good for earnings. It's good for the S&P, and that will also be good for those emerging market companies that are in the US. But then makes the US more competitive against other emerging markets. So that's something. And so both of those are very good for global growth, for global risk. But then we have the other elements which are more inflationary. Tariffs, that is a long topic. And the question there is, are tariffs definitely coming in, or are they a negotiation tool, or are they both there? And there's winners and losers in that in emerging markets. And then the third thing is, the IRA are certain elements that have helped companies and sectors in Asia that were benefiting from that. Are they going to be taken away? And yeah, it's too early and too complicated to see. And I think ultimately it's also how much is Trump going to spend. Maybe the market is overreacting a little bit on the dollar and the 10-year. And then we go back to Trump's also saying that he's going to sort out geopolitics. And this is where tremendous upside could come from, and for emerging markets. Ukraine, Russia, the ending of that would be good, lowering the cost of oil. Let alone the end of human suffering. But it would give some massive stability to that area of the world. It would also be very good for EMEA. A lower oil price is very good for Asia, particularly for domestic Asia. There's one other element that Trump talks about, which is he wants a weaker dollar, And so even though his policies are quite, his initial, or the thoughts of his initial policies are quite dollar strong, actually he's going to try and get a weaker dollar. And we know a weaker dollar is incredibly good for emerging markets. It's quite hard to see where we get to a weaker dollar from his policies. But, those are the sort of main issues that I think the market is sort of looking forward to more clarity on.
Let's just look at some of the specific drivers of growth in emerging markets. Some of these have been in the headlights of geopolitics and trade tensions during the Biden administration, of course. I'm thinking of EVs, semiconductors and AI, and the renewable energy market. Looking ahead, it's very early days, but how would which industries, sectors and markets, although we've touched on them, do you see encountering tailwinds as well as headwinds under Trump 2.0 administration?
Yeah, I think it's too early to tell. I mean, overall, it's obviously going to be those that are exporting into the US that don't have production in the US. Those companies that are dollar earners are going to benefit a lot. So it's not really a sector basis on that. Those companies with, Brazilian companies with production in the US will be real winners, etc. And in Asia, it depends where you are really in the supply chain. I mean, I think autos are in a quite difficult space globally in terms of Chinese autos have had lots of, in the whole EV space has had lots of tariffs thrown on it by the US already, by Europe. I can't see them getting better or worse. But China still manages to produce cars and make money out of it. So it's a real challenge. I mean, but the real challenge for European autos. But the main driver of EV there really has been the sort of overcapacity in China and the demand. And if we do see stimulus come back in and the consumer spending more, and we've mentioned many times, and many fund managers have mentioned that the level of household savings in China is very high, that I would see that as really a domestic driven market. Obviously, autos in Korea are a bit more tricky, but a lot of those auto companies have factories in Europe, in the US, in the UK, in Mexico. Yeah, so they're slightly challenged. It depends on what it does for capex as well, and if there's tax cuts in the US and there's a new corporate capex cycle in the US, well, then there's a lot of the emerging market supply chain that would benefit from that. Mm-hmm. On the domestic side, inflation was never as high in emerging markets as it was in the US. The more we see, interest rates come down, and it seems like the US path is still interest rates coming down, although maybe not as many as been factored in the market 2 weeks ago. That would be positive as well. And domestic sectors is all about penetration, is all about consumer confidence, and so domestic sectors in EM still see a very good story there.
How would you sum up how you position to I guess, take on some of the expected challenges of Trump 2.0 while maintaining a posture or exposure to the long-term opportunity in EM?
Yeah, so going into the election, we had become a bit more cautious and really focusing on companies where we were confident the earnings were improving, and valuations hadn't got too high, that they weren't sort of running on fuel. Coming up the quality curve a bit more on the sort of leverage side, worrying about US rates and the dollar. And then, well balanced in that if there are any changes in China, that we can benefit from that. So more of a sort of domestic bias into China there. And yet again, companies that have had a very good run this year, we've trimmed positions, and we've got more exposure to those that might benefit from stimulus and from the balance sheet, benefits there. And a flexible mindset to look forward and try and deal with conditions. I mean, this year, that framework has worked well. We, reversed a very large, underweight in China, in some strategies to going overweight. And then, when the market got to 11.5 times earnings, when everyone else was getting excited, we lowered that exposure. When we started to see this pivot from the government that they were serious, we increased our exposure again, and we managed to benefit from that, that fairly swift run in China. And then, yet again, discipline on valuations, lighten up. Yeah, what's in the price? What's your reward risk? And that framework is built. These aren't the first challenges emerging markets have had, Ben. And the beauty of emerging markets is always somewhere to invest, but you have to have a framework. You have to be country aware. You have to be focused on good companies, and that combination, is what we're going to carry on doing.
Thank you very much. That was terrific insight on emerging markets, and I think the message that's come across is, the structural appeal of emerging markets, the diversity of growth. Yes, the uncertainties of a new US administration. We certainly need to be mindful of them. There will be challenges, but there'll also be opportunities. The main thing to focus in is the domestic strengths of each of the markets, across the asset class. Thank you very much again, Sean. Thank you.
Pleasure, Ben.